Most people spend their entire lives handing money to banks. They save in accounts the bank pays them almost nothing for. Then they turn around and borrow from that same bank, paying interest back to an institution that built its entire empire on one simple idea: controlling the flow of money. But what if you could take back that control? What if every dollar you spent could also be working for you at the same time? That's the infinite banking concept. And today, we're going to compare it honestly against 3 other strategies, including the Roth IRA, which is one of the best savings vehicles ever created. Here's the setup. You're in your 20s, you have $10,000 a year. 4 strategies, 30 years. Let's see where each one takes you. Strategy 1, the high-yield savings account. Right now, top rates are 4 to 5%. But over 30 years, those rates move with the Federal Reserve, and history shows a long-run average closer to 2.5%. Your gains get taxed every year, no death benefit, no loan access. At year 30, after taxes, you'd have about $400,000. Strategy 2, the bank loan. You need $40,000. You fill out an application, take a credit hit, and pay back the bank at nearly 8% interest. $809 a month, 60 months. When you're done, you've handed the bank $8,500 of your money in pure interest, and your savings were crippled the entire time you were paying it back.
Strategy 3, the Roth IRA. And here's where we have to be completely honest, because the Roth IRA is a genuinely powerful vehicle. At $7,500 per year, the 2026 IRS limit, invested in an S&P 500 index fund at the stock market's true geometric return of 8.8%, your Roth at year 30 is worth over $1,085,000, tax-free. That is a real number, and it's bigger than the IBC vault. So why would anyone choose IBC over a Roth? One word: life. At year 10, your Roth has $112,000 in it. You need $40,000 for a vehicle or a home down payment. You pull it out. It was contribution money, no penalty, no taxes. You got the cash. But here's what nobody tells you. That $40,000 stops compounding forever. You cannot put it back in. You've already maxed your contribution. By year 30, that one withdrawal has cost you $216,000 in lost growth, permanently. And while your Roth is locked behind a gate until age 59 and a half, with penalties and taxes on any earnings you touch before then, the whole life policy has no gate, no age requirement, no IRS rules, no application. You can access your vault at 25 just as easily as at 65.
Strategy 4, the infinite banking concept, using a 10/90 split whole life policy. 10% base premium, 90% paid-up additions, properly designed. Day 1, before you've built a single dollar of cash value, you have over $500,000 of death benefit protecting your family. By year 1, 85 cents of every dollar you put in is already in accessible cash value. By year 10, your vault is worth $112,000. Now you need $40,000. You take a policy loan, not a withdrawal, a loan against your cash value. Here's what changes everything. Your cash value does not go down. It keeps earning on the full balance as if you never borrowed a dollar. The policy doesn't care. It keeps compounding on the full $112,000. When you repay, on your own schedule, no bank approval, no credit check, the interest goes back to your policy, to you. At year 30, the IBC vault is $558,000. The Roth is more on raw numbers, we've been honest about that. But the Roth was locked. The Roth penalized you when life happened. The Roth cost you $216,000 in one withdrawal. And the Roth has no death benefit, zero, from day 1 or day 10,000. The IBC isn't trying to beat the Roth in a spreadsheet. It's trying to win in real life, where you need money before 59 and a half, where your family needs protection before your account is built, and where every dollar you borrow should still be building your wealth at the same time. The banks built their wealth by being the lender. IBC puts you in that seat. Build your own bank.